Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360 degrees trades. Here are a few images from my life in a village in Thailand. These are available on my website superiorprofit.co on the images page. Greetings, I am Sagar Nandi, active trader in multiple markets. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. Let's start with instruments that often move the market. Dollar Index ETF UUP. As I anticipated, it is continuing to be in an uptrend. After hitting the white direction line, at which point it was above upper boundary, it displayed a bear release signal and a bearish headwind and pulled back in a systematic manner and stopped right near the trend line support. All the direction lines are now below price or are uptrending except this white direction line. I am expecting that this trend line support will hold, that UUP will continue to be in an uptrend. If that happens, it may put pressure on the market. On the other hand, if it falls down, it will first find support in this trend line support and then this trend line support. I am not confident that it will break even the lower trend line support in a hurry. But we'll see what happens. Right now, we see that it is continuing in an uptrend. The other instrument that tremendously influences the market and is always correlated with the market, positively correlated, is the Megacap Custom Index. It displayed a bearish headwind at the very top, the week where it made a new all-time high. And since then, it is moving practically sideways for 3 weeks now. The backdrop color has remained bearish. In the daily, we can see the sideways move. It is inside a triangle pattern created by trendline resistance and support. There is no trend at present. If it breaks down the support, then it will put pressure on the market. If it breaks to the upside, it will be bullish, but I am expecting that if it breaks to the upside, it will probably create a false upside breakout. But that is what I am thinking by looking at how the market is acting. If I am trading based on the false upside breakout, I'll have to wait for that to happen. I cannot start shorting when the breakout happens. When the breakout happens, can I buy? I'll decide that by looking at the market internal health, if that happens, if the breakout happens and when that happens. Right now it is moving sideways. One day up, one day down. There is no trend. Therefore, I am not anticipating either way based on this chart. Though based on how the market is moving, I am expecting it to go down sooner rather than later. Again, I will not trade based on that anticipation. I can be ready, but I'll have to wait for the trend line support to be broken before taking a trade based on the breakdown. After looking at the two instruments that often influences the market, dollar index ETF and mega cap custom index, we now move to market breadth studies, internal health check. Usually the market follows the internal health, not the other way around. Total view, the broadest view of the market, internal health check. After the cluster of Hindenburg-Omen, one of which was associated with a large distribution count, market is moving practically sideways. If this yellow line, dashed yellow line, which happens to be the 50-day moving average, if it is broken to the downside, that will be bearish for the market. Notice that this week, though the candle chart is moving practically sideways, a pattern that we saw in mega cap custom index, internally the percentage of stocks above 50-day moving average, it is continuing to make lower high. That is the yellow line, and even the white line, that is percentage of stocks above 200-day moving average, even that is starting to make lower high. Also, if you see the 3-month new high low, an oscillator that I started using after watching Dr. Jeffrey Scott's videos, that also tilted down, though the market is moving sideways. That is showing internally the market is not bullish. We'll see more indications of that later, but before that, let's look at the weekly daily of the total view. I'll not look at the composites and the major indexes internal health today. They don't tell any different story from what total view already showed. This is total view, the broadest view of the market. The backdrop color turned bearish 1 week ago. This week we have an inside candle. Backdrop color is remaining bearish. After this sharp drop last week Friday, we are moving practically sideways. If this trend line supports and the yellow direction line, they will break together. If they are broken to the downside, that will be clearly bearish for the market. That will be a time to start shorting earnestly. If you are willing to short, or you may protect profit in long positions if you only take longs. You could also play with contra ETFs if you choose to. Like the mega cap custom index, total view is also saying that it is directionless. We'll have to see whether it goes up or down. I am anticipating it to come down, but I'll wait for the breakdown to happen before taking any trades based on that anticipation. After internal view, market external view, this is how most people around the globe see the market. Again, the pattern will be same across many market level instruments, same as what we saw in mega cap custom index and total view. Starting with SPY, backdrop color bearish, inside candle, indecisive candle in weekly, no direction in daily. If this trend line support is broken, that will be bearish. Currently, no directional preference. QQQ, inside candle in weekly indecisive shape, daily without any direction. Here we have multiple direction lines to break before we can start to take shorts. Can we take longs? In fact, there are stocks that may be bought now. I'll try to do a top-down analysis and find some buying candidates. I'll be defensive in doing that because the market is at all-time high and behaving erratically, up one day, down one day. Some stocks are moving by huge percentages, up one day, another stock down another day. That is not a time, in my view, to buy stocks at all-time high or 52-week high. We may buy stocks at a lower price level, defensive stocks probably, at least that's my preference, meaning they may have a dividend yield also. I'll try to find some trades like that for buying. Before that, let's continue the market level analysis. DIA, same thing, weekly indecisive, bearish color, shape indecisive, daily no direction. If the trend line support is broken, that will be bearish. There is no other trend line support nearby. IWM made a new all-time high this week, but sharply fell after that. This is what I meant by creating a false upside breakout. It has made a false upside breakout. We can see that in weekly also, went sharply above the long-term watermark resistance this week and immediately reversed down. However, it stopped right at the trend line support that did not allow us to short. The trend line support is there in daily also. If these trend lines are broken, that will be bearish and that will be a time to start taking shorts. Currently, overall, the market external view and internal view both are indecisive. Continuing with Q Edge, it has bucket analysis. Again, thanks to Dr. Jeffrey Scott, after watching whose videos, I incorporated it in Q systems, made it 100% real time. They have an uncanny ability to pinpoint reversals. Very high accuracy rate. As we will see, there is no signal based on bucket analysis as an oscillator, but it will show bearish nature of the market, even though market tried to go up on Friday. QH also has sector industry stock breadth. It shows where the market came from, where it is now, where it may go next. Bucket analysis. Why I mentioned that it is going to show a bearish nature of the market is because 62% of S&P 1500 stocks, that's a nice mix of large, mid, small cap stocks. 62% of those are below mid Bollinger Band. So overall the market is bearish, though Friday we had a bullish day. So we had a recovery in an overall downtrend at an aggregate level. It is neither oversold nor overbought, but overall more bearish than bullish. If we look at longer duration, 1 month and 10 days, sector industry stock, advanced decline bread, they are red color, bearish. 5-day medium term this week turned bullish, but then it weakened again over 2 days. Friday was up day, but that up day was not enough to make up for the loss of Thursday. That's why 2-day period is still bearish. It is showing red to green to red to green flip flop. If this flip flop continues, we'll expect a red day to come on Monday or Tuesday. We'll see if that happens. The flip flop may not continue, but if the flip flop continues, we expect the next move to be to the downside. Next, technical breadth. Using Q Finder, we only profit by buying stocks going up or shorting stocks coming down in directional trades. Most of my trades are directional trades, if not all actually. Technical breadth shows the overall posture to adopt and allows easy drill down to find low risk trade setups. Starting with the weekly technical breadth, if you remember last week this was quite bearish, magenta color all around. Now it is bullish. We saw Q edge weekly period is also bullish, but 10-day was bearish. So that Q edge secondary stock breadth was showing flip flop from 10-day to 5 days, and here also previous week we saw bearishness. Now we see bullishness over the weekly period. Friday's period, Friday secondary stock breadth was bullish and technical breadth was also bullish. Q market level summary. The most important trading decision is whether and where to buy or short, or whether to stand aside. Looking at the erratic market movement at or near all-time high, IW made a new all-time high last week. I am reluctant to buy now, especially stocks that are already at a very high price level. For example, at price extreme high or jump thrust high or both. Some of those stocks are falling sharply. I tweeted about one such stock, and there are more stocks like that that are coming down sharply from price extreme high. I will not suggest buying those. I'm not buying those myself. At the same time, there are trendline supports in all market level instruments. Mega Cap Custom Index has it, Total View has it, all the market ETFs has trendline support. So I will wait for the trendline supports to be broken, and only if they break, I am going to short more earnestly. Review of last week's trade ideas. I shared only one analysis last week, that was AVGO. I discussed it on this day based on Friday 1 week ago, and I mentioned that I would like to short it using short call vertical. I also mentioned I did not have any position in the stock AVGO at that time. Incidentally, interesting, isn't it? I mentioned in the last market recap that it is possible the stocks at or near all-time high, based on some news, they will suddenly jump up. That is why instead of shorting using stocks, I did buy some contra ETFs or shorted some ETFs like TQQQ and used SQQQ. I also had a position in RWM or bearish trades. I usually don't trade ETFs, and I mentioned why I traded the ETFs was because the stocks at 52-week high or near all-time high, they in the current market have a tendency to jump up hugely based on some feeble news. Any news, any positive news, stocks tend to move up. That is what exactly happened in AVGO. I had a bearish view. I had no position in AVGO, but on a news on Monday it hugely went up. So I had no business taking the short trade on an up day. As you can see, very next day it pulled down. That was Tuesday, and Wednesday, Thursday it tried to go up but fell down. It created a bearish indecision cluster. On Friday it fell sharply, created another bearish indecision. So that is not looking bullish at all. I think the news was used to lift the stock, and those people who bought, and people are certainly buying on this frenzy, not only in AVGO stock, many AI stocks, AI related stocks, on any news, these stocks are being lifted up anywhere between 5 to 15, 20%. That's what I call frenzy. I'm not willing to buy at those times. I'm looking to short, but it did not allow me to short. Now if it comes down, the trend line support is there. If the trend line support is broken, I will not mind continuing with my view and taking a short trade in AVGO using short call vertical. Alternatively, if it goes up, I am expecting it to create a false upside breakout, just like IWM did that, and that will also be a lucrative point to initiate a short call vertical. I have no position in AVGO yet. I am going to continue to track it. This week's trade ideas, as I explained, I am reluctant to buy stocks at a high price level. I am not able to short yet because trend line supports are there in many market level instruments. So if I am willing to buy, I may buy stocks at a lower price level and with high dividend yield. I can find such stocks in real time. I did tweet about one such stock on Friday just before the market close, meaning I found them in real time just in a few minutes. And let me demonstrate how I found them. Let me do a proper top-down analysis starting with Q edge. Go to the industries, click on the bull button to look at industries that are either the strongest or the most accelerating. This bull button, single button does that. Drill down into stocks. I could drill down into liquid stocks, but for today let me drill down into S&P 1500 stocks that are available in Q edge itself. Look for stocks that were up on Friday. I click the plus button. I want to buy a stock that is either of undervaluation or high earnings growth. Click the single star green button. From 1500 S&P 1500 stocks, I am left with only 208 stocks. What are these stocks? These are in strong or accelerating industries, either undervalued or having high earnings growth. They were up on Friday. But I am going to be defensive, so let me sort by dividend yield. Only look at stocks that are having dividend yield of 5% or more. I'm left with only these stocks, and let me see if any of them or how many of them have possible trade setup. One single click. From there we link to Q Finder, and from S&P 1500 stocks I am left with only 5 stocks. Again, what are these 5 stocks now? They are in strong or accelerating industries, undervalued or with high earnings growth, dividend yield of at least 5%, up on Friday, having a possible Q trade setup. I like to buy stocks at a lower price level. So some of them are having low price level like Western Union. That is what I tweeted on Friday. Target also has a lower price level. 2 are in the mid price level, 1 in the high price level. High price level doesn't mean we cannot buy it. We have to look at the chart. So let's look at these stocks using at a glance weekly daily. This is exactly what I did on Friday, and in real time in a few minutes. I was not talking, of course, with anyone. So in only a few minutes I found the stocks, and I actually took a trade in at least one of them. Sorry, let me come here, get the ticker symbol. Let's look at them one by one. KGS, no trend line resistance in weekly, backdrop is bullish. Daily has support but has resistance also. So how I look at stock like this, Kodiak Gas Services, KGS, is that I may keep it in my watch list. I would not buy a stock like that on Friday, but on Monday, if it can break out of the trendline resistance, I don't mind buying it. Or if it comes to the support and starts to go up from there on Monday, then also I don't mind buying it. If it comes to the support and starts to go up, or even better, creates a false downside breakout, then my stop using real-time charts, 5-minute charts during market hours is very small. I don't mind trading that. Or if it breaks out on Monday from the trend line resistance, that's also a possible buy point, but I would not buy a stock like KGS on Friday itself. WU, Western Union. This is the stock I tweeted about on Friday, and this has something, many things actually quite interesting. Firstly, in weekly, we had a bullish headwind that caught almost the very low. It's a unique reversal signal, excuse me, unique reversal signal. And as is often the case, price retested the watermark created by the bullish headwind and went up. It has broken above one trend line resistance. There is another resistance above, but at least one trend line resistance is now broken. Backdrop color flipped from bearish to bullish. In daily, it has created a triple bottom, has a bullish headwind cluster. Here also it has one breakout on Friday. There is another trend line resistance, but in weekly daily both has breakout on Friday as well. And this is the one I chose to share on Twitter. KGS, as I mentioned, I would not like to buy. WU, I took a stock position on Friday. I'll add to that under two circumstances. One is if it can break out of this trend line resistance. Second is, as I mentioned in case of KGS also, if it can come to the trend line support and find support there, which is basically this triple bottom in daily and double bottom in weekly. In either of those two cases, I will add to my position. I have a long stock position. Let's look at the other stocks. LXP. Here also, like in case of KGS, it is about to break trend line resistance. Incidentally, this is the stock that is at price extreme high. Even if it broke the trend line resistance on Friday, it seems it has broken it technically, but not very decisively. Technically, it has broken the trend line resistance, but not by a big margin. Even if the breakout is there, I don't like to buy stocks like LXP because the recent swing low is far below. Contrast that with Washington, Western Union, not Washington, not Washington DC, Western Union, WU. Here, the stop is not very far away. I will put the stop below the trend line support. If I'm using stops, I'll come to that comment why I added that phrase that if I am using stocks. But here the stop is not far away, and that is a constant in all my trades. Stop is not far away. Let's look at the last two stocks, NLY. The daily has a breakout similar to WU, but the weekly color is bearish. So I delete that stock. I will not like to add it to my watch list also. And last is TGT, Target. Here the weekly has not cleared the trend line resistance. The daily has technically cleared, but again this is a case where the recent swing low is far away. I don't like to take stocks like that. That is why I traded WU on Friday and not the others. And another reason is, if you look at these few stocks, let's create a scorecard of only these few stocks. And look at their dividend yield. WU has a very high dividend yield of 11.3. NLY is also having high dividend yield 13.5. Earnings dates are here, not very far away for both of them. This is earnings period. So both of them could be bought. Let's look at NLY again. Yes, because the backdrop color is bearish, I did not trade that. I opted for WU, very high dividend yield, and it actually broke trend line resistance in both weekly, daily, though other resistances are there. As I mentioned, I will add to the position under two circumstances. So that continues to be my stock pick for the week. If you carry out the 360 degrees analysis using Q like that, you'll most likely find other trading candidates today, just as you would almost every other day. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as these live examples, I'm quite confident shows there is no reason not to do that. Trade profitably. Thank you.